stage now. And our moderator for today and the MC for most of the day is going to be Andres Ospina from our Family Office Club team. He's also the head of our PitchDecks.com investor relations marketing agency and works with a lot of charter members coming onto the platform as well. So welcome on stage. Thank you, Andres.
I'll give you this computer to take. Ladies and gentlemen, welcome to the Family Office Super Summit. Can we please give a round of applause to our first panelist? Awesome. No, we had some technical difficulties this morning, but that's live events for you, ladies and gentlemen. That's just the way that the cookie crumbles sometimes. But hopefully you guys enjoyed breakfast. You guys are going to have some good cocktails today. And like Richard said, you're primarily here to do deals, right? So we're going to get this panel going. And today's panel, we're going to be talking about niche and new investment strategies. That's how we really want to start the day and really discuss the investment strategies that a lot of our investors are using and utilizing in their due diligence process and in their allocations. So guys, I like to get some noise in the room, so your hands are going to burn every time that I'm on stage. So just one more time, can we please give another round of applause to our panelists? Thank you. So, panelists, there is 7 of you on stage. Thank you, Brian. There's 7 of you on stage, and I'm kind of rigorous with my panelists. So I'm going to give you 30 to 45 seconds to introduce yourself quickly, your name, the name of the firm, and a little bit about what your firm focuses on. So I'm going to put, Brian, you got a microphone right there. I'm going to put you on the spot. Go ahead and start it. Here we go. This one.
Hello, my name is Brian DeLucia. I'm the managing partner over at Arrivato, which is a family office. Background has been 30 years now in land and building development. Most active these days throughout the Sun Belt region. Acquiring quite a bit of land, and also outside of real estate, we're extremely active in traditional lower middle market businesses, manufacturing, logistics, transportation, and then also have a couple holdings overseas in transportation and cell towers.
Excellent.
Thank you.
Okay. Good morning, everybody. Does it work? Testing. There we got one mic. We got one mic to share. Good morning. How is everybody? Welcome to South Florida. If you're not from here, welcome to paradise. So my firm is the AID Group. We're based in Fort Lauderdale. I've been here for the last 33 years in the financial services world. We have a full scope financial planning firm. Underneath our umbrella is the AID Wealth Management, Advisors Insurance Design, and a separate company, the 401k company. But my culture 33 years ago comes back to the niche market of tax avoidance for the ultra affluent. So today, hopefully, I get an opportunity to tell you a little bit about some of what we do, unique, creative ideas. So glad to be here.
Go ahead, work your mic. That should work.
That's right. Yeah.
Go ahead.
Good morning. No.
That worked.
Hello? Okay. Great. Good morning. My name is Benjamin Marks. I'm the founder and CEO of My Family's Office. It's a leveraged equity holdings group, also based in South Florida. We're owners, operators, and developers of commercial real estate across 7 states now, mostly in the East Coast. We own and operate everything from single-tenant leased, specialized pharmaceutical-type properties all the way to multifamily, and have also done opportunistic residential and multifamily development.
Good morning, Rich Palutz, partner in Edmodum Holdings. Edmodum is a private equity holding company. We have 3 operating businesses, biotech company, lower middle market investment bank, and then we have Air Asset Management, which is my day job. It's a $250 million registered investment advisor solely focused on life settlements and longevity investing.
Good morning. Teresa Esser from the Silicon Pastures Angel Investment Network in Milwaukee, Wisconsin. Our mandate is investing in the Midwest region of the United States. But we want to do something different and special. So we've been doing angel investing for 20 years, and we've noticed that if we can lower the risk by investing in companies that have more revenue, we will do better on our investments. We've discovered that there are companies in Japan and Korea that have millions of dollars in revenue but no U.S. presence. So we have an office in Seoul. We work with the Japanese government. We find companies with millions of dollars in revenue, and we help them set up a new office in Milwaukee. Or we set it up ourselves. You can call that angel investing because it's a brand new U.S. company run by Midwesterners who know how to sell. But we get the benefit of an established company with millions of dollars in revenue that's about to expand globally.
Great. Since you got right into mandates, can you explain, do you have examples of some companies you guys have kind of taken from Asia and brought over here?
Sure. There's a company named Livicon, which they manufacture thin, smart film that goes on glass. Press a button, it goes opaque. Press a button, it goes clear. They had $20 million of revenue. We traveled over to Korea with our then governor in 2017. We put on a reverse trade mission where we brought 8 companies to Milwaukee, and I personally worked with my colleagues to try to get them meetings. How easy was it to get customers to take a meeting with Livicon? Well, of the 8 companies, Livicon was the easiest one, and a Milwaukee person came forward and said, hey, I want to quit my job and start a new business. I want to create a new business to sell this product. So he set it up. He set up a company named Dynamic Glass Products. And the first year they had $30,000 in revenue. The second year they have $300,000 in revenue. There's no reason to think they can't keep expanding at this rate, especially with additional investment. So we want to replicate that. I think that's a really, in my opinion, a low-risk way to do angel investing.
And what niches would you say those are listed under that you guys are focusing on? Like niches, sub-niches, industries?
The niche is totally specific. Find a company in Japan.
Okay.
So biotech, industrial products, there has to be some reason why it's not easy for somebody else to copy it. So sustainable competitive advantage, Internet of Things. It's harder to, software we could do, medical devices.
Raise your hand if you think that applies to you. Raise your hand. Nice and high. No chicken wings, guys. All right, great. Thank you so much.
The other thing is portfolio optimization. If you have a company that you're currently selling somewhere in the United States and you're not exporting to Korea or Japan, we can do portfolio optimization on an existing portfolio. We can help you take your company overseas. We can help you reach the global middle class by working with partners in Korea and Japan.
Awesome. Thank you so much, Teresa. And our next, Paul.
I'm the founder and managing partner.
A little closer.
Of Raven Capital. Raven Capital is a technology venture fund. We have offices in Silicon Valley and in Toronto. We invest in early stage technology companies, Series A, companies that are post-seed, that are in market, that have developed their tech. We take advantage of cost structure differences between Canada and Silicon Valley, where things are very expensive and a lot of dollars go to non-tech costs. We nurture the companies in Canada and package them up for sale to later stage capital providers in Silicon Valley. And we source our deals globally. We have partners all around the world in the hottest innovation ecosystems.
Excellent. Thank you.
Good morning. My name is Jose Vizcarrondo. Sorry. I'm with Elgathon Capital Management. I'm a partner at Elgathon. We are a multifamily office based in Sioux Falls, South Dakota. We serve as chief investment officer for a number of families, mostly Midwest-based, but not all of them. The way we work is we manage across all the asset classes, really although on the equity side, public equities, we manage most of those in-house with our core value strategy, and we'll manage the fixed income ourselves as well. On the private side, we're active in equity, real estate, and debt, and what we like to do is identify partners that we like, that people that we know, and develop a relationship over the long term, and work with people that we know and in geographical areas that we know as well. That means we'll do maybe 1 or 2 of those private investments per year. And again, in geographical areas that we know and with people we know. We have kind of a unique geographical focus. It's upper Midwest, and at the other extreme is Puerto Rico, which is where I'm from, and not only for that reason, but because there are incredible opportunities right there right now. So,
What kind of real estate in Puerto Rico and the Midwest are we talking about?
Puerto Rico has a very unique situation in that pretty much the entire island of Puerto Rico is an opportunity zone. So if you consider opportunity zone investing throughout the country, you're mostly looking at very distressed areas where Puerto Rico offers the opportunity to invest in opportunity zones in a beachfront property and resort area. So it's kind of unique. So you'll see higher returns there, and with some extra tax benefits as well beyond the typical the standard
In
opportunity
hospitality.
zone. Residential, commercial, anything. And just on opportunity zones, it's relevant to the topic of this panel. We think opportunity zones are being seen primarily as a real estate investment vehicle. However, if you just think about how the benefit of the opportunity zone law is structured is towards back-end capital gains. So if you can look at private equity investments in opportunity zones, we think that's a way to kind of look at this and structure it. So we're looking at those both in both of our geographies.
Okay, excellent. Thank you so much. All right, so we'll start again. I'm going to start again with Brian. Brian, and this is a question I've asked you many times, but I know that for a lot of our audience members, it's really important. How are you guys sourcing deals? Like, how are the deals ending up in a meeting with you?
A couple things. Number one, certainly we have a very vast inner circle. We're friends with, a lot of other families who, happen to see a lot of transactions. Some of them are real estate families, and many of them aren't acquiring land or doing, ground up construction. So it's natural to, divert or flow that, over to my direction. Also, attorneys and CPAs, as well, property managers in the, in local markets. And
How about, because I don't know, you and I have done panels probably 5-6 times up to this point. What leads you to actually end up meeting with someone here?
Well, I think
like, what stands out for you that leads to a meeting in a room like this that may be considered "quote unquote" cold?
I mean, maybe like in terms of meeting
them face to face.
Yeah, I think
what stands out.
Certainly the face-to-face interaction is always invaluable. I think one of the things I always recommend to me is just be a human being. Ultimately, a lot of times people will come up and they'll just start pitching or grab like 45 minutes of my time or whatever. And I think just, in a venue like this, it's just good to, let's have a brief conversation, just be a human being, let's build a little rapport. And, later on, I think it has led to a number of very, very productive discussions and reviewing of, transactions, certainly from people that I've met, through this venue.
Any key words that stand out that kind of go, okay, like let's have a conversation?
I like stuff that's quiet and fairly discreet.
Oh yeah.
Certainly. It's very, very rare that we'll look at anything that's out there on the market or or has been floated out to 20 other people or so. So certainly quiet is always a good, very, very good word.
Excellent. Great. Mark, what are you looking out for here? What has you taking things to the next level, to that next meeting? What stands out for you?
Yeah. So I'm probably when being introduced here today, we were talking. You mentioned that everybody here is investing. So I'm kind of a little bit different from that. Yeah. So, like I said, my company specializes in full scope financial planning. So although we do a lot of the, we'll call it the black and white vanilla stuff for the average everyday investor, my own personal clientele and two other individuals that work with us, we've worked with the affluent marketplace for quite a bit of time now. So what we try to do, and I remember someone telling me years ago that when you're dealing with affluent clients, quite often you make better return finding situations where you can avoid taxes rather than making better return. Well, now with this group that I've had an opportunity to talk to, maybe that's not the case. Some of you get some pretty darn good return. But avoiding taxes in our environment, which most would agree that taxes are not going down. And I'm talking income, gift, estate, capital gains, all of them. There are some very creative ways of doing that. And those are some of the things that I like to bring to light. I have been involved with putting together some situations where you could say, well, how can you do that? And I like to get that response. How do you do that? Well, I'll show you, and I've taken that on to the state, to the Florida Bar, Florida Division of Accountancy, and soon on a national level, and I give continuing education. Some of these things have been approved by the higher up. So I teach attorneys and CPAs as well how you do it, some of what we do.
Excellent, excellent, great. Thank you. And Ben, can you give me some examples of some deals maybe in the past 12 months that really resonated with you guys and maybe you guys closed on and moved forward with?
Sure. We're primarily commercial real estate investors and developers, but about 2 years ago, we decided to expand into peripheral businesses, areas like fintech that have a significant real estate connected play, types of products or services that we would be able to use within our operating business. About a year ago, actually at this summit last year, we ended up doing a deal with one of the sponsors who had a presentation outside.
Fintech?
It was not fintech, but it was related to monitoring systems for boilers. And so anything with either a fintech or an iOS play, Internet of Things, is a very big part of our industry. Real estate is a very slow industry in general. It's one of the last to be disrupted, but it's finally getting there, and we're seeing that with a lot of partners and a lot of companies that we deal with both in the U.S. and in Canada. And to answer your question, so last year actually at the summit we met with one of the sponsors based in Vancouver, in Canada, who had great monitoring systems that were proprietary, that were patented. And a great synergy for us is to be able to actually test the product or service across our portfolio of properties, actually have proof of concept in-house, and that gives us confidence to invest in those businesses outside of real estate.
Okay, excellent. And can you raise your hand if you're in fintech? Raise your hand, fintech, nice and high. I'm curious, please. All right, great, excellent. And thank you. And iOS? IoT? All right, fantastic. We'll have some questions later. All right, great. Richard, please.
So I also have experience of finding an opportunity at the last Super Summit. And typically what I suggest to folks, and again, we're a holding company, investment bank, life settlements, and biotech are the three companies. I was talking about our life settlement business, which is kind of a boring double-digit return investment opportunity, and I found an individual or group that had an oil and gas opportunity that wasn't a fit, obviously, for our hedge fund, which is our principal investing vehicle, but for our investment bank. And typically when interacting in an environment like this, the best way to get a referral is to give a referral. And when this particular group came up to us, we, having an investment bank and having access to family offices, which is one of the specialties of our investment bank, we typically look at later stage deals, typically 2 to 20 million in the EBITDA range. A lot of the folks that I've met through these conferences maybe are a little bit earlier stage, looking for more opportunistic capital. The company that we met was $7 or $8 million in revenue at the time. a little bit later stage, so it was a good fit. And the differentiator there was it wasn't an immediate solicitation from them to try to get our business, but more of a networking opportunity. And they started giving us some referrals, and all of a sudden, that got our attention.
Got it. An example of a deal that you guys have worked on in the past 12 months, 24 months looks like?
Well, this was an oil and gas opportunity, and so what they
What
do.
stood out about that opportunity?
What they do that's different is they tend to buy the more shallow producing wells from the majors at a discount. A lot of the majors like they want the deep well rights, and they tend not to invest as much in the more shallow areas because the revenue opportunity isn't as high to move their needle. What this particular group does is they come in and they apply an array of technologies that they've sourced from around the world, and these technologies are green. So they're cutting edge, newer technologies with 21st century technology that can, by applying these array of technologies, they've been able to double the production of these wells, these kind of orphan wells that haven't had a lot of attention. So to me, it was in an industry, oil and gas, which is not going away anytime soon.
Yep.
And it was an opportunity to increase the revenue rate significantly, and doing it in a way that has a sustainable edge.
Okay, great. Oil and gas, energy, please raise your hand. All right. And are you guys looking outside of oil and gas into the future of that? Sustainability, solar?
For us, our biggest opportunity right now is in an area called life settlements. So life settlements is the purchase or sale of an insurance policy, life insurance policy, in the secondary market. And so life insurance sales or life settlements is now considered a sustainable investment. So it touches on one of the most important issues, which is senior financial independence for the SRI investor. And so this particular space has gotten a lot of institutional attention with Berkshire, Oaktree, Apollo, Blackstone coming in. And so for us, our business, our hedge fund business raised over $100 million this year. And a lot of that's been from family offices and multi-family offices, just looking for kind of a boring double-digit return, which is an interesting. So for us, it's been that looking for opportunities within that space, the longevity space.
Excellent, thank you. And Teresa, if I could ask you a little bit more about your due diligence process for a lot of these deals that are coming on your table, especially the ones that you say you're taking here and bringing overseas.
Well, if we're sourcing a deal in the United States, we have the ability to perform extensive due diligence. You mean, so for example, there's a company based in Milwaukee called Front Desk, which we have invested in, and Milwaukee is a small town. You can get to know people pretty well. The entrepreneur was the son of my high school English teacher. But I mean, you typically want to learn who their family is, and so you can perform due diligence by talking to people talking to other angel investors. With this company, I listened to the entrepreneur talk about what he wanted to do. He wanted to rent out apartments and then Airbnb them out. And he was starting out by renting 6 units in a building, and if he got additional revenue, he could rent out 12 units in a building. And then he has operational excellence. He does a really, really good job with pricing. He takes care of the housekeeping staff, and the operating margins are very good. So he started, I was talking to him, and then he was in one city, he was in Milwaukee, he expanded into a second city, a third city, a fourth city. Now I believe he's in 15 cities. I wanted to take him to Japan. So I took him on a trade mission. Our governor was going over to Japan. I took him along, and there was tremendous interest in Japan. They have second-tier cities, third-tier cities. There are apartments there, and there are inbound. There are companies that want to encourage tourism. So this company could push tourists to Japan ahead of the Tokyo 2020 Olympics. Well, I told him, let's go for it. Let's get additional capital and help you expand globally. And he's like, there's such tremendous opportunity right here in the United States. we're in tier 2 cities, we could expand into tier 3 cities, tier 4 cities. We could start selling software, licensing software to other applications. We could, like I said, expand in the number of units per building, the number of buildings per city. There are so many opportunities for expansion that I'm not ready to go overseas. So it was kind of me pushing him. But it's doing fine, but we can't always, achieve my dream just because I think he should do it.
Got it. How many decks do you think you look at a month?
How many decks? So I talk to my friends, I talk to my syndication partners, and I work with other. So I don't start out by looking at the decks. I judge the entrepreneur on their ability to make phone calls. I judge them on their ability to get the attention from people that I know. So I would say I'm one level up, but looking at decks is like I'm not judging the company on a deck. There are so many accelerators that can make the company look pretty, that it's really about the human touch, the confidence. Can you make a phone call seriously? That's core for business, and a lot of millennials can't. So those are the things that I look for.
No, for sure. Millennials get freaked out when they get a phone call, like super scared. So I feel like I have a total advantage. So that's big. So you definitely don't want awkward people.
You want somebody who can pitch you, because
Yeah.
the way they're pitching me is the way they're pitching their customers.
Yeah.
And it's tremendously important. I mean, I want the company to say, I need to work with you because you can take me into Asia through Japan and through Korea. I need to work with you. So they need to fight their way in front of me. They need to insist that I have a meeting with them. They need to capture my attention, and they need to blow my mind on their technology. Then they need to be able to survive rigorous due diligence from one of the most difficult angel investment networks in the United States, because we're incredibly conservative. Milwaukee is an incredibly conservative city. Wisconsin is an incredibly conservative place. So a person really needs to fight to get attention from us. But if you can do it, I mean, we can give you the entire world.
Excellent. Yeah, great. So a lot of it's just like, would you say a lot of it's like gut intuitive, what you're sensing initially from that person, their passion going into it, So for those of us that need public speaking, and communication, it's important, I think it's really important. So thank you, Teresa. Paul, if you can kind of dig deep a little bit into some of the closed transactions in the past 12 months, 24 months, what they look like, what stands out.
Well, I think what's happening now in venture capital with technology companies overall is people are starting to shy away from the trend of the past 10 years, which is growth for the sake of growth. Yeah. And they're turning into something which is core to us, which is, can I see a path to positive cash flow?
Profit.
That's our nature, because all of our partners have been company founders and owners and operators, and have bought and sold companies before, so we understand the fundamentals of business, which has been counterculture in the technology world for a few years, but it's now something that's very important as we hear about companies like WeWork and
Uber.
Exactly. So just destruction of wealth for the sake of growth is not what we're after. We're after creating wealth. My business partner is on the floor. He's the guy with the white turban. In his previous fund, he had a 65% IRR. That was a lot of wealth creation. So as a niche strategy, venture capital is a form of private equity. We're not trading on the public markets and so on. And there is more risk associated with that higher return. But our history is, in being able to produce that. So that's the core. So technology, sourcing deals, we're set up globally to source the best deals possible. But technology, the tech or the deck is just the table stake. It's really whether the business fundamentals are there, and that's where our due diligence comes into play, and so on. So we need, at our early stage of company investment, we need highly scalable opportunities. Without that, the rate of return will be less than what we need.
But if they're losing money, you're saying no right off the bat?
There has to be we have to understand how they're going to make money. It could be that they're just getting into market, and so they have a runway that they have to burn cash on.
Yeah.
But we have to be able to understand that we will exit the company as soon as possible, hopefully with a positive return. So there will be situations where the company is not profiting right when they're getting into market. But generally
Can you give me an example of, you don't have to even say the company's name necessarily, but just maybe what they had or what really made you believe that, okay, they need to burn some money on this runway right now, but I can see how this can be profitable down the line.
Well, there's two quick examples. One, we have been business partners with a digital marketing agency that serves some of the biggest companies in North America. They became fatigued by every time that they took on a new client, they would have to hire 30 more developers and marketers on their team. They developed an artificial intelligence engine to actually drive an automated way of changing, transforming the websites of their customers without any human touch. So basically, pixel by pixel, based on user interaction, those websites are changing so that every single person has a customized web interface. So that's saving huge amounts of people cost and allowing the digital marketing agency to focus on their premium services, which are strategy.
So it's like AI web development?
That's right. Another example, we've studied the whole crypto space and distributed ledger technology space for many years to understand how people actually will make money out of it. We tend to focus on business-to-business investments rather than consumer. And there's only a very small handful of opportunities we see that we can actually see a pathway to money. It's a very volatile, changing market, and we tend to focus on supply chain investments in that, our opportunities in that space. One company that I ran across last month at the Singapore FinTech Festival was an opportunity where they used distributed ledger technology. But it wasn't about crypto currencies, it was about gamifying people's bets on whether a crypto currency was going to increase or decrease in value. Wow. So the opportunity was they were charging people money to place those bets.
Like crypto futures?
Yeah, they weren't investing in the crypto, they were actually just taking money from people placing bets on crypto. I can understand the money aspect of that. So
interesting. Yeah. Wow. So you guys are looking at, can you raise your hand if you're in the crypto space, blockchain? Saw a lot of you today. All right, great, excellent. Great, and Jose, if you can, once again, just what a deal looks like. Give me some specifics. I want to know the juice.
So quickly, I'll mention three things that we are working on and we've started over the last 12 months and still looking forward to grow and invest in. Number one, as I mentioned, an opportunity zone. So we're putting together a fund for our clients. So we're looking for projects. So we're looking for opportunity zone projects, as I say, ideally in our zone. So as I described, and if they're equity rather than real estate, even better. So that's one thing we're working on right now. One thing that we started about 12 months ago, was we partnered with a leasing company. This is a company that is active as a specialty finance company in capital equipment, capital leases for equipment financing for small and medium businesses. So fantastic track record of very, very good underwriting and quick response. They needed to expand their funding sources, so we've worked with them. First we underwrote them, then we worked with them. We helped them create a parallel fund with our clients and their network of clients, so that everyone was a winner, right? So our clients were able to access an asset class that's mostly unseen, very specific and very, very focused, and they benefit as well from a new funding source. So we're looking to expand that network as well and be more active in the private credit, specifically in what we consider to be the working capital side of the financing needs for companies, both again equipment leasing and even shorter term on the receivable side. And thirdly, we are just again to give you an idea, we're working private REITs. So private REITs, if you've seen them, private REITs, if you understand the one you are looking at, they can be more stable, higher yielding than public REITs. So we're right now working with a private REIT for our investors. So those are the three things we're working on now.
Excellent. Thank you so much. Yeah. All right, ladies and gentlemen, that concludes our first panel of the day. And before we give them a round of applause, since it is the first panel of the day, I do want to remind everybody here to please give our panelists time and space to exit. So let's make sure to give them a little room. And they're going to be over there in that sponsor area where the coffee is, in the room where the other sponsors are, in this direction. But please remember to give them time and space to exit this room, okay? We don't want to get any type of fire hazard. So if we can please give a big round of applause to our first panel of the day, everybody, for our Super Summit. Excellent. Great, gentlemen. You're going to exit right out that door, okay? Thanks a lot, guys. Appreciate it. Awesome. Excellent. Thank you so much, Teresa. Thank you, Paul. Thank you, Jose.